Matthew Salthouse, Chief Executive Officer, Kainantu Resources Limited. Kainantu Resources listed December 2020, coming up to our first year of listing, and we took a platform in 2020 with an Asia-focused junior exploration company, a small asset in the Kainantu district. Over the last 10 months or so, we've built on that, both from a corporate perspective and in terms of organic growth. We're quite excited as to where we sit right now. We think we're at an inflection point in terms of taking the company from an initial platform into its second stage of growth, and quite keen to update our investors and stakeholders on that further today. Thank you.
Matthew, lovely to have you back. We saw you back in May. It's been a funny old market for precious metals this year, and I don't think your chart's too unsimilar to most of your peers in that regard, in the sense that it's come off a bit. So I wanted to catch up with you because I think Papua New Guinea is a very interesting jurisdiction, and I want to sort of understand how you are approaching it, because you talked to me last time about having a base from which to build, right? And there's a few things that you talked about in terms of how you're going to go about doing it. So first of all, how's money? Let's start with that.
Yeah, so in terms of cash, we're sitting about $1.5 million US dollars at the moment, which is sufficient for our current programs, and certainly we've got a burn rate of about 120,000 US a month, and it's relatively easy for us, given the early stage nature of our projects, to turn that on, turn that off. There's a couple of initiatives where we look to potentially spend into that, but we're quite comfortable where the cash position sits at the moment. Having said that, obviously we do have a growth profile ahead of us, and if we can look at options to fund into the near term in an appropriate way that protects shareholders, then that's something that we're minded to look at as well.
But you're going to have to give people or investors something to work with, right? So, the burn rate is quite low, but I don't know what you're doing with that. Are you doing anything meaningful, or is that just people sitting behind a desk staring at screens? I mean, what are you working on?
Yeah, it's a very, very good question, because, COVID times, it is a bit delayed and a bit more sporadic, if you like, in terms of getting outcomes from field work. And being in a position to report on that. But our last 6 months, if you will, since we last spoke, very much focused on the sort of two planks of the company, if you will. One's corporate initiatives, and we announced the deal in relation to the May River copper project, and there's some other opportunities we're looking at from a corporate collaboration point of view as well. But more importantly, we have worked the ground pretty hard in terms of our core assets, KRL South and KRL North in the Kainantu district. So we've moved on from basically identifying some prospects in KRL South, and now honing in further in terms of some chem work and sampling work and mapping work and what have you, to look to delineate some drilling targets in the near term. And also we've worked the ground quite hard in relation to the KRL North asset, where we had no previous access before due to some historic legacy land issues that predated us. But we've had access to that ground now. We've worked that part of the portfolio as well. We've taken probably just under 3,000 samples across the projects, and in addition to the May River a project which we acquired for initial field survey there. So we've been quite active in terms of sampling and analysing those samples. The issue for us has been, and I suspect for a lot of other juniors, certainly other juniors operating in Papua New Guinea, has been quite sporadic to delays in getting samples processed and out of country. And of course, without the proper analysis coming back from the samples, it makes, you obviously do need that to plan the next stage of programs. But in summary, our KRL South asset, we've worked the prospects there pretty hard, in particular East Abernothy and Yarrow Ridge, and we've also had some meaningful outcomes coming through from KRL North.
So what does that mean? Tell me, convert that into English for me, and for people viewing this, right? So working hard means what? I mean, when people talk to me about anomalies and vagaries like that and surface sampling and so forth, it doesn't feel substantive for me. Like, have you got drill targets yet? Well, do you know where you're going to go?
Yeah, no, I'm happy to talk in plain English because that's my world as well, quite frankly. So the first one to focus on for us is East Abernothy prospect. So East Abernothy prospect, we identified a 40 gram per tonne sample there. And that was in addition to a lot of cross-structural mapping work that we identified. So we could see effectively a lot of similarity between that prospect and ground further north where K92 operate in Billamura mineralised goldfield, if you like. So that gives us a basis and a very interesting basis for us to do some more modelling and identify, do some work on looking at the structures there, and do some more sampling with the intention really, and we have an excavator working that ground at the moment, working sort of from the southeast corner, sort of on a northeast trending sort of basis across that area, with the intention of giving us a high degree of confidence for some drilling targets, identifying some drilling targets in that area to be drilled in targeting the first quarter of next year. Again, it's subject to all the vagaries of COVID and what have you, but in plain English, chem work, physical work on the ground, moving us to delineate some drilling targets at East Abernothy, and we're really quite confident that we'll be successful with that.
Right. So how do you go about it? You got 1.5 million in the bank. You talked about maybe needing to go to market at some point, but you're in control of the timeline, given your burn rate. So the thing that gets people interested is drilling. You talk about Q1. Do you have enough money to do some basic drilling between now and then? Oh, no, sorry, not between now and then. In Q1, or will you need to raise the money to be able to do that drilling?
Most likely look to come to market with a good story to raise some capital. Having said that, we have been in discussions with key shareholder and group in terms of APEV Group, who most likely have capacity to provide some sort of funding, whether that's debt or equity, to be determined in any case to support a drilling program. So we're very confident that we can support and fund a drilling program, irrespective of where we go in terms of raising capital. Probably in terms of between now and next year, the key thing for us is probably to do geophysics work, because clearly geochem work is one thing, but I don't think anyone really would encourage doing a drill program without having done some geophys work as well. For us, we are looking at a potential collaboration in region with some other people who operate in region, and we'll probably look to talk in more detail about that in the next month or so. But that has a number of exciting options for us in that it does allow us to collaborate with some successful operators in the area and demonstrate that we're on their radar as they are on ours. But also it's very cost effective. So for us to marshal a drilling program, probably of our own volition, it's potentially $750,000. But for us to, a geophys program is $750,000. But for us to do that, in conjunction with some others, is much more cost effective. It does let us partner and share data, and also it lets us do that work, the geophys work, and concurrently with the field work as well. So that means that that all comes together at a much more coherent, a faster pace than otherwise would be the case. And so that does give us some confidence that we can well define some drilling targets early next year to move in towards obviously the ultimate end game of defining a resource here.
So depending on who that is, one assumes they've got a better balance sheet than you, and they're in the region, so they understand how to work that. Do you end up giving away a big piece of your company because you need them to come in this early, or how do you protect yourself from dilating shareholders and giving away what potentially could be quite an interesting project?
Yeah, so look, at the moment we're really just talking with it's just technical sharing of data. So we're looking to partner with people to help us do some, as I say, some geophys work and share that data and analyse it and see what that provides and gives us. So it's really just a step in terms of building a relationship with well, look, we've got very strong pre-existing relationships with a lot of the majors and operators in PNG anyway. partly because of association with APF Group. So, you know, it's kind of building on those relationships. I don't see at this stage that we've had any sort of commitments to give away the farm or anything of that nature. And the fact that APF are still material shareholders on the register is very unlikely that we will. But it does open the door to look at other options and the optionality that comes with that. Particularly, I would suggest in relation to our KRL North asset, which, you know, sits right adjacent to K92's current operating ventures.
So why would they do? Why wouldn't they just wait for you to do the work and then take a look at the public data and say, okay, that gives us, but now's the time to maybe go and have a chat with you boys. Why would a company like it? I'm not saying it is Kainantu because I don't know. Why would they come and talk to you now or work with you now and spend a bunch of money with you now versus, you know, just maybe waiting to see when you actually go and do this yourself?
Yeah, I don't know. They're good guys. I don't know. No, look, it's seriously. I think that you know, I think it is the nature of the industry that we work at, that people do collaborate and they do share information and they do see opportunity to work together. And it's, you know, the land is pegged. The land is pegged. So once that happens, there's you know, any sort of competitive dynamic or what have you sort of goes away. I think probably also I would hope that, you know, we've managed these assets well in the last year, but certainly come into that for the last 3 years or so as a private company as well. And we've developed credibility and connections and are well regarded by the Mineral Resource Authority in Papua New Guinea, as well as other operators there. So, you know, people will see that we're a consistent player. We do achieve things that we say we're going to do, and we're easy to do business with. So I think that all forms a basis for people to say, you know, yeah, okay, let's work with these guys and see what we can do with them.
Okay, so and I do want to make a point here. It's like, again, I know you mentioned K92 in the context of someone who's nearby. There are other players in the area with big balance sheets. I'm not, you know, I don't know who it is. You do. I don't know who it is. But the guys like that, I'm trying to work out, the relation, the kind of agreement that you could have in place, by understanding what you've got on your property, it may help them sort of understand what may be on trend in their property. I kind of understand that. And this isn't what is. This is like the way that companies like that like to come in and get an early view of what could be a takeover target at some point. And if that is the case, do you adjust the way that you do things, the order of play for you? Because that's the game plan here? Get one of these big guys with the big balance sheets to take you out?
Look, I think our real story is to continue to build a company. And I think we talked about this last time, and it's been my philosophy, and I certainly know my chairman's philosophy and the board, is that, you know, if you're not in this game to build your company at whatever level it is, it's very junior, early stage for us or more advanced, then, you know, you're not really doing anything. So we're here really to build a company. If we were fortunate enough to have, or we're not fortunate enough, if somebody offered us something which was fortunate enough for shareholders to be accretive and made sense for M&A, then clearly, you know, you look after the interests of your shareholders, and we're corporate players to an extent, and you know, we're not, you know, we're capable of being practical in this regard. The same token, you know, we enjoy what we're doing. We think we've done well to build a platform of you know, pretty early stage exploration assets into something which is compelling and something which is starting to emerge as a corporate vehicle, and that may well be of interest to people to come and, you know, not necessarily take over, but potentially take a stake in as a you know, as an entry point for other opportunities in country. Who knows? Look, I think the case in point, looking at the data, is the KRL North asset, where, as we say, the tenement sits right adjacent to K92's current operating operations. You know, the mineralised controlling structures that we have there in our sort of emerging in the southeast corner of our tenement are clearly very similar and identical to those within K92's existing ground. There's clearly an emergent sort of ring feature, if you will, on our tenement, which is clearly shared by K92. So I would think it's in everybody's applying common sense. It's with everybody's interest to hone in particularly on that asset and see what can be done. So it's a case of looking for what value can be extracted out of that, which is good for us and potentially good for other people, and seeing where that leads. From a corporate point of view, we were open-minded.
Okay, you want it, they may not. Who knows? We'll wait to see where these conversations lead with whoever you're talking to. Let me. And it would seemingly be the most obvious thing, but you're not going to give much away today. But let me talk about a phrase you used earlier. You talk about corporate initiatives, and in the context of your market cap, which is small, in the context of precious metals having come off, and your share chart looking like a lot of other people, you're off 50%, right? You've got to do something big. You've got to do, scrabbling around the surface. Doing things slowly may not be enough to, attract people. It may not be enough to retain people. I'm talking investors. You're going to have to make a big move. And you guys, you're based out there. You've got access to capital and all sorts of wonderful people. We talked about it last time out. You're going to have to do something big, aren't you?
Exactly. I think that we're going to have to do something big. We want to do something big. I think that was always the intention for setting the company up, get the platform running, bed it down as a company, work the existing asset, but look then to leverage that into other opportunities, be it in Papua New Guinea or more broadly. So, and I think that I'd hope that we've been successful and we've caught the eye of some of the bigger participants in the industry who may look at us and say, okay, these guys seem to know what they're doing. They seem to manage what they have successfully. They're very well regarded by the authorities in Papua New Guinea. And, they may well be quite a credible partner for us to look at collaborating with in terms of, maybe a much larger asset than we have. I mean, ultimately, you move along a development curve. We want to build a portfolio of projects and assets. A key milestone for us is to have a resource in the company. So to the extent that we can look at opportunities which allow us to collaborate with other people in region or in country, maybe larger than us, to bring a resource into the company, that's something which we look closely at. And, we promote that concept with lots of other people who operate in Papua New Guinea, and I'm hopeful that on the back of that we can leverage our way into a bigger story. But as you say, that I guess gives you a bit of the strategy about how we go about getting there. But the ultimate end game is to do something much bigger with the portfolio or the simple company than we have. I think taking rock chip samples and what have you in Abernothy is critical to our ongoing existence, but we want to do more than that, and we set this company up with that intention.
So how do you pay for something like that? What does a deal structure look like? With not a lot of cash, your options are limited unless you've got a very willing partner, in which case you've got to maybe then question the asset. So how would you go about structuring something like that where you could get, because you talk about having it like something with a resource potentially, reserves. Yeah, that's expensive.
Yeah, look, it's potentially expensive. I think it involves a sort of a degree of collaboration, if you will. It's almost like an inverse joint venture that we kind of look at, where you may well take an asset and look at building that out and paying back over time on delivering milestone outcomes to somebody else, either script or cash in yourselves. One of the key things that we do have is as I say, is a very strong social license in country, which is comforting for other operators in the country who are looking to potentially partner with juniors. And
why would they want to partner with you?
Look, as I say, I think we've achieved things that we say we want to do in country, and we've done it. We've done everything we said we would do, and that's been noted by the government, by the mining minister, by other key stakeholders in country, and I think that in a short period of time since listing, but going back to pre-listing times, we've consistently delivered outcomes for stakeholders in country, and I think that gets noted.
But why would someone with a decent asset with a resource on it want to give it to you? Surely they want to be able to leverage that and make money for themselves. Why would they offload an asset to you?
I think it's a key, great question. I think it really is. It's looking at these assets and looking at what a corporate's objectives might be. A big major's interest really is to build a porphyry, copper gold project or whatever it might be in a large resource. And sometimes projects fit that bill, and after spending time and effort on it, sometimes they don't. Whereas our focus is much more on looking how we can optimise, an epithermal vein system, what have you, what it might be for a high-grade operation, and effectively potentially turning a project on its head, if you will, using having a much more junior miner perspective and turning a project around. So I think that's probably where there's some niche for us. And look, I've got a great team of people with us, or essentially I can extend the hand to, who've been involved with me over a number of years in doing this sort of re-optimisation work in Indonesia and similar jurisdictions. So I think that is something that we can, in addition to dealing with social licence, strong credentials there, we do have an ability to turn an asset and re-optimise an asset.
Okay, so look, you're nice guys, you know how to do business in country, and you do things the right way. But just I want to understand it. If you do pick one of these things up from a large corporate, it's because it's non-core, or it's high grade, and thereafter bigger copper porphyries or gold copper porphyries. So this wouldn't interest them. This sort of thing that you're looking for wouldn't interest them for now. But so can I come back to how you construct something like that with not a lot of cash, which is, would you be expected to pay cash? Would they just take a piece of your company? How do you build that relationship financially?
Yeah, so look, I think you always have an open mind, and whether you do transactions which is subject to some form of funding is always an opportunity, and whether you do a combination of scrip placement into the company and or cash, they're the options that we look at. I think the fact that our share register is, albeit we don't have a great deal of cash, the share register is the share price is off like all the juniors are, which is another story for another day. But the shares are quite tightly held, and so we have a good degree of flexibility, if you will, there to bring other parties onto our share register without that having a monumental impact on the existing shareholders and dilution for them. So that is certainly something which, from a capital structure point of view, we offer. And I think for the right project and the right marketing of that, I'm very confident that we have the right team and the right credentials to be able to raise capital on a transaction as well.
Okay.
On the right transaction.
Okay. I'll sit back and wait for that, and pick up the phone and let me know when it happens. You mentioned May River earlier. Where you've acquired the May River copper gold project. Have you started any work there? How is that being prioritised? How much money is being spent on it? And in terms of what can we expect to see from that anytime soon?
So the May River project, I think when we last met, we were alluding to potentially doing a deal in the copper space. So we've obviously done that now. We've executed contracts to acquire. It's effectively two or three tenements controlled by two companies in May River. Highly prospective copper territory right next to the Freda River project. So we've been active already to date in relation to doing an initial field survey there, verified a lot of the outcomes that we'd already had already been worked on the ground there by previous holders of those tenements. We took about 120 samples, and 20 of those went for petrology, and the balance were processed as well. That gave us confidence as to the prospectivity of the project, in particular around a prospect called Mountain Gate. The neighbouring prospect to Mountain Gate already had a drill hole there of 109 metres at 1.53 grams per tonne. So there's a good body of historic data there. It's an excellent project, sits on the same trend as Freda River's existing copper projects. So what are we going to do there next? So we will, we'll continue to develop a project plan to get on the ground there in 2022 and advance that. That will be a separate project, if you will, from what we're doing at Kainantu. We're putting in place a specific project team to do some work on the ground there for that. We've actually had APEP's had another bulk commodity that they've been working the ground on, and we've been supporting them for in Papua New Guinea during this year. And that project will come to an end, so we're likely to be able to redeploy in association with them, or hiring some of their staff through a team to move across to this May River project and advance that. So we don't intend to just sort of sit that on the sidelines. We do intend to get in there and work that asset, that project.
So give me clear how you put that together, okay? Because you talk about taking control of it, right? And then acquisition. They seem interchangeable. How did you pay for that? What's the expectation around that agreement? What are you obliged to do, not obliged to do? Do you own it, or have you just taken control for now? How's it work? So look, there's two agreements. One is with a company called Ninko, which is just ceases to acquire all of their company, subject to them confirming clean title to the ground. And if they can't, confirm clean title, and we'll potentially step in and take the ground in any case. The second is an option agreement with a company called Hard Rock. The initial step there is to complete field study and exercise an option to take 10% of the company. So this is this field study we've just done. So we'll be in the process of exercising that 10%, I expect, in the near future, subject to final sign-off with Hard Rock, and we'll probably have some news flow on that in the next couple of weeks. That will give us 10% of that entity, but it also gives us management control of the asset. And then we have an option to acquire the remaining 90% of the project over the next 12 months. The consideration payable for that is script. It is in script, and a valuation to be determined. The methodology to determine the value is one which is will be accretive to existing shareholders, so no massive dilution there. On finalisation of that, we take 100% of Hard Rock. So, in summary, that option agreement, 10%, is payable on completing field study. We've done that. We'll take control of that. We'll take 10% of the company and take control of the project. And then in the next 12 months, we'd anticipate at a time of our choosing, to an extent, in collaboration with Hard Rock, taking that asset 100% into the company. In the meantime, we have full control of it. Okay, so I'm not quite sure in dollar terms what that could equate to, what that will equate to, and what you think you're going to be spending on this thing, and what you think it could mean. Because obviously they did happen. There's a little reaction in the market, and then it kind of came off again. So I'm just wondering how you position deals like this, because you're talking about doing another potential couple of deals in the next few weeks. So 10% of the company, there's a long way to go, right? There's a lot more money to come. So are the coming deals going to be more like this one, or are they going to be different? I mean, how do you picture it?
Yeah, so look, I mean, first option is just commercial transaction in terms of technical sharing, which has no impact on equity at all. It's a commercial deal. The second opportunity we're looking at is or potential, looking at a number of opportunities, but is corporate sort of focused and collaborative, and the composition of that, yet to be determined. I can't really go into too much detail on that today. In terms of the May River transaction, there is a pricing methodology set in the contract with Hard Rock. In terms of the value that script would be released to the Hard Rock holders on us taking control of it. Again, that's commercial in confidence. I can't go into too much detail about the specifics of the pricing, other than the pricing would always be consistent with the pricing we used to demerge KRL into the listing vehicle last year. So again, that's in plain English. That's basically saying that we won't pay more than and most likely on a script basis we would not be paying. We'd be paying not a premium to what we paid to set KRL up with originally.
Okay. You can see why people look at this might be like, oof, I don't know what this means, because there was talk about, $250,000, as a payment.
That's a separate, so that's with Namiko. So that is a separate deal. So that's determined, and that small one. That's the Namiko side of the transaction.
Yeah.
The hard rock side of the transaction involves a script placement on an independent valuation of the asset. At the time of us choosing to exercise the option to acquire.
Who's paying for the independent valuation? Because that usually determines the outcome, doesn't it?
KRL pays for that.
Right. Okay. It'll be interesting to see how that. And what's the timing on that, so we understand at what point we'll know more about money and conditions.
So that really is contingent on us looking to exercise that option. I expect we'd sort of do that in the first half of next year. The costs to maintain the asset and get on the ground and work it are relatively similar to what you'd be spending for Kainantu at the moment. So I talk about the cash burn of $100,000 or so. It's a little more remote, so it requires some helicopter support and what have you to get in and out of the project. But I wouldn't expect that between now and us finalising the acquisition of that, I wouldn't expect the cash spend to be material.
Okay, so let me. So again, I'm just trying to build a picture of what you're trying to get. It's all about building blocks. This is great. Some geophysics work with a partner to be determined. So you're going to let us know before Christmas, let's say. Maybe some kind of acquisition from a meaningful company who may be looking to offload something. Maybe, because lots of things could fall over, right? With conversations. You've done the copper gold acquisition. I can see that you're trying to do things. I'm just trying to work out, how significant these things could be. And I think that the one that sticks out for me is if you're talking the language of trying to acquire something with a resource on it, I'm all ears. Is that where I need to be looking?
Exactly.
Okay.
That's where we want to go.
Okay.
That's all. And this is it's an interesting story that we take this very early stage Kainantu asset, we add to it the May River. The obvious next stage is to move in with another project which moves us further up the development curve, if you will, in terms of the portfolio of assets we hold. And that clearly involves acquiring a resource.
Gotcha. Okay, you can't give too much away. I'm going to push you over. You're going to be making forward-looking statements if we're not careful. Don't want you to do that. PNG, great jurisdiction for gold. Some great stories there. In fact, we actually talking of K92. They're going to be coming on soon. COVID still an issue there, it seems. Plus elections coming up as well.
Yeah, so it's an interesting time in PNG. COVID is certainly an issue which is impacting on local communities to a much greater extent than it was 12 months ago. And so, we have quite a robust program in place for our people in country, and in terms of the program, in terms of working with vendors and what have you, to manage the exposure there and to keep operations and field work ongoing during the crisis. We have to be mindful of potential impact for that going into the future, and it is a delicate time. COVID is a finely poised issue in Papua New Guinea. There's no doubt there, and so it is certainly a key operating focus for us. In addition to that, as you say, the election cycle comes around next year. And again, that's always an interesting dynamic in Papua New Guinea, as in most developing countries. So, we are minded to that, and lots of different stakeholders and their approaches to us our partners and how to manage that. It will be a big focus for us next year as well.
Okay. Well, Matthew, appreciate you coming on today. Good to see you again. You should come on more regularly. And if you've got some news coming up, sounds like you should be. We'll speak to you soon. Thanks. Appreciate your time today.
Hopefully we can come back before Christmas with some further progress.